Good morning, everybody. Sharon, can you confirm you can hear me?
Yes, Bernard, loud and clear.
All right. Thank you very much, our participants, for coming in. We have 96 participants. We appreciate your taking time to join this webinar. This webinar is being integrating ESG across the organization. And this is our first KPMG East Africa Banking ESG webinar. The webinar has been set up to help us bring certain insights on the rise of ESG agenda, and we will be understanding more from the speakers on the drivers of the change. The financial sector plays a very significant role, and banks not left beside, and therefore we will see how KPMG is shaping the ESG and sustainable finance agenda and working with our clients across the region to position themselves in the market, not only in the region, but also at global sector. We will also get insights from what the CEOs are saying in the region, as shared by our head of impact, and at the same time, look at the way sustainability disclosure and the ESG issues are being viewed by different stakeholders in the world. And therefore, without much ado, my name is Bernard Amuka. I'm a partner in advisory, and I will be taking you through this session. Got keen interest in asset management, technical accounting advice, and working with our clients in integrated reporting and climate change initiatives. My background in accounting, and without much ado, I would like to welcome you so much into this. And just to start us off, I would like to bring to you some few housekeeping rules. All mics have been muted, and you will only speak when invited to do so. Please put on your mobiles off when you get a chance to speak. And also note that this session will be recorded or being recorded. And most importantly, we'd like to hear your views. So use the Q&A chat box at the bottom of your screen to post your questions, comments throughout the session. Should you choose to ask questions, of which we expect all of us to do, indicate whom the question is directed to, your name, and the organization from where you come from. Most welcome, and without much ado, I would like to invite Mr. Joseph. I would like to take you through the agenda for the day. Today, our head of banking will be taking us through what it really looks like and the drivers of change in the ESG agenda. We will be looking at the global overview of ESG. What do we see our clients doing in the banking sector? We will come back and look at the East Africa overview. What is really happening around this subject? And then we will have a very good panel discussion and wrap it up with Q&A session. So to start us off, we would like to see what your views from where you are stand for, and we have lined up 4 poll questions that will help us look at to what extent ESG is being integrated in the institutions here. So first question is, to what extent has your bank integrated ESG issues into the core business processes? And here we look at strategy, governance, and risk management. Voting starts now, and I encourage all of you to vote, and we'll post the results shortly in a minute. Okay, please vote. Okay, keep the votes coming. Excellent. So based on the votes, we are seeing 50% of you saying somewhat integrated into core business with a clear path, and 34% of you say it's not integrated into the core business, but acknowledge the importance of ESG issues. And a few of you say somewhat integrated into the core business, but no clear path. Very, very good. Thank you for that, Paul. And without much ado, I'd like to invite our head of banking, Mr. Joseph Kariuki. Joseph Kariuki is a partner in the audit practice. Joseph has handled many technical accounting topics with you in the sector. You know him very well, and he is taking ESG assurance services to the next level. Joseph is a member of the Institute of Certified Public Accountants and also a member of the Institute, where most of you have interacted with him in the Standards Committee at the Institute. He is also a member of the Institute of Internal Auditors, and with this, he's done over 20 years of experience and currently serves as Head of Financial Services in KPMG East Africa. Without much ado, over to you, Joseph.
Thank you very much, Bernard, and good morning to everyone, and welcome to our webinar this morning. Today we'll be going through one of the very important subjects that is developing around the world and on ESG. And as we all know, the world has changed in a big way, and the impact of the ESG is being felt across the world today. And this, we do believe, as KPMG is going to be a very, very significant contributor to the growth of the businesses across the globe. And when you look at what is happening across the globe as well, our employees and the customers that we interact with have demonstrated they have very different expectations of the businesses around them. And they are looking to work for businesses that are ESG compliant. And that's the only way then that employers will be able to attract the best global talent across the world. We also see the shareholders and the leaders across the world putting pressure on the businesses and also the regulators as well to prove that we as businesses are able to act responsibly and invest responsibly. And this is why this subject on ESG is very, very critical for us as businesses. And therefore, it is important as businesses, we make choices on where we need to invest going forward. I think it is in the UK, the EU region, where we have had the leaders in the market say that if there is no ESG integrated into the businesses, then they are not going to give capital to those businesses. And that is how important the ESG agenda has become to the world. So what then, from a banking perspective, are the key questions that you should be asking yourself this morning? And from a KPMG perspective, we believe these three questions on one, what impact do your customers and you as a business have on the planet, which is the E agenda? What do you contribute to the communities that you operate in, which is the S? And how then do you conduct yourself as a business, the governance aspect? So the environmental, social, and governance aspect of the business will need to be embedded into your strategy. And these three questions then will guide how you operate as a business going forward. From a global point of view, it does appear that for you to have ESG, that will give you the license to continue running your business, and as well provide you with an opportunity to lead the rest of the world. And why is this so? We see most of the businesses that are going to be impacted by ESG, the oil industry, and most of those other businesses that are directly impacting on the climate risk that we have today. So if there is no change of the strategy for those businesses, then maybe they may not have a license to operate in the new world that we are living in today. So it is therefore important for every business to embed ESG in your strategy, and these need to be owned by the board. And especially from a banking perspective, when you look at the customers that you are working with, then those questions around how you work with those customers will be very, very critical for your businesses. So what then are we asking the businesses to do as we go through these webinars today? One, you will need to embed ESG in your strategy. Secondly, you need to look at how you interact with your customers and suppliers and embed the aspect of climate risk in your lending and other aspects of the business. Then you also need to consider the regulations that have been issued by the various regulators. I think we have various regulators across the East Africa who have given various regulations. How do those impact on your business? And finally, how do you measure the achievement of the set strategies? Do you have the data to deal with the reporting aspect, and how then do you report to the rest of the world? We do believe as KPMG, when you have done all these, you will have a very resilient business in the midst of the emerging challenges that we have in the world today. And you will be set to lead both in the banking sector and in the rest of the world. So at a snapshot, that is what we are doing as KPMG. And I think we will have various speakers introduce the subject to us in detail. And then maybe thereafter, as the banking community will continue to engage you to see how then this agenda of the ESG can be integrated into your businesses. So thank you, Bernard, and back to you again.
Excellent. Thank you very much, Joseph, for that wonderful insight. Participants, you now can hear the messages that are coming across. No ESG, no capital, and stakeholders are going to work with companies that embed the ESG agenda. Our next poll question after that insight is what is the most important reason for your bank to focus on ESG issues? On this question, I'd like to see 100% participation. Option A, importance to stakeholders. Option B, importance to long-term performance and value creation in the bank. Is it impact on the company's brand and identity, or is it management of non-financial risks? And lastly, but not least, is it opportunity to improve operational efficiency and return on capital? Voting starts now, please. And I encourage all of you to vote. Your vote counts. Please keep the votes coming. We can do better. Beautiful. Please keep them coming, almost closing. Okay. Thank you. 58% of us are saying importance to stakeholders, the investors, employees, customers. What is the most important reason for the bank's focus on ESG issues? Followed by 35% of you saying importance to long-term performance and value creation. Thank you very much. That is very useful. And without much ado, I would like to introduce the next speaker. Our next speaker is Mr. Christoph Bez. Christoph is a partner and head of ESG Financial Services in KPMG. He has interest in financial products and derivatives, capital market strategy, regulation and processes, decarbonization in banking, ESG strategy, governance and products. And his background is finance, where he's done Master of Finance from Frankfurt School of Finance and Management in Germany, and business administration from the same university, and has done certification in finance and history from the University of Sydney in Australia. He has over 20 years of professional experience in investment banking and advisory, and co-lead financial services transformation in our German practice. Without much ado, Christoph, welcome and thank you for taking time very, very early in the morning to join us here. Over to you.
Yes, thank you very much, Bernard, and welcome to everyone. I'm very glad to be in this round here. It's quite early in the morning for me, but I will try to do my best still. But I'd like to add on to what Joseph said earlier and basically talk initially about the role of the financial sector in this whole ESG transformation that we'll be facing. But first of all, let me say ESG is the topic of the decade, if not the century. There's a huge transformation need to achieve carbon neutrality, net zero, ideally by 2045. And obviously, this is a key task for the real economy out there. Existing technologies have to be replaced, new technologies have to be developed and implemented. And there's a huge capital need for this. I try to give you some numbers. Speaking about my home market, Germany, the investment needed to achieve carbon neutrality by 2045 is around $6 trillion, of which 1 trillion is actually additional investments. So not for replacing existing technologies, but for new technologies for innovation. And this is obviously where the financial sector comes in as a financier of that change. So we believe that ESG is a huge opportunity for financial sector clients to obviously help their customers with the necessary transformation, but also gain market share and attract new customers. That's the one side of the medal. The other side is obviously that financial sector clients have ESG risks in their books. The current positions are exposed to ESG risks, in particular climate and environmental risks. And this is something that has to be managed. And this is also something where we see, in particular in the European market, a huge regulatory and supervisory spotlight on. So it's about balancing those two aspects, the risk side of things, as well as the opportunities that the whole ESG transformation is bringing along. Now, let's go a bit into more detail on what ESG actually means for banks, and moving to the next page. Let me start by saying that for us, the key experience is that ESG affects banks along the entire value chain, from strategy down to reporting, and that both on a strategic level, but also very much on an operational level. And we try to structure the key focus areas that banks are facing along this house that you're seeing here. And this is also how we've been working for the last 2 to 3 years in my core market in the EU, and when we are actually addressing this topic with clients. And I'd like to guide you through this very briefly. First of all, on the strategic side of things, starting on the top left, it's key to take a stance. Your stakeholders, and I think that was also the result of the previous poll, they demand from you to take a stance on ESG, on sustainability. Whether for you it's simply a compliance exercise, or whether there's like actually an intrinsic motivation to generate positive impact. In any case, you have to take a position, you have to formulate an ambition, a strategy, and communicate that to the outside world. And obviously adjust your governance accordingly. And based on this strategy, you will have to decide which products to offer going forward, which new services you might want to offer, and also which clients to do business with going forward. There are certain industries very much in the spotlight. We talked about oil and gas before. In Europe, we have coal power as a very important industry sector that's heavily criticized at the moment. And this is where banks need to decide who to do business with going forward. To come up with this initial strategy, ambition, and decision who to do business with, it's key to have transparency. And this is number 3 here. It's about having your own taxonomy of what is sustainable for you or not. And then based on this baseline, decide on where you want to go. In the EU, you might have heard of the so-called EU taxonomy of sustainable activities, which is a framework that tells us which activities, economic activities, are sustainable or not. This is a good hint, but lots of banks are coming up with their own classification methodologies to answer this very important question. Then moving on to the more operational side of things, looking at the loan side and the refinancing side, obviously it's about integrating, no, just one slide up, please. I'm now looking at number 4 and 5. It's about integrating ESG aspects into your loan business. Independently, whether you're talking about sustainable loans or just normal loans, ESG aspects that need to be considered, in particular ESG impact, but also the risk side of things. And the same is true for the refinancing. You may want to issue sustainable products, green bonds, and the likes of that. And this is something that needs to be included into your process world. A key point of focus, and also in the African market, I heard, is around ESG risks, number 6 here. And this is what has been keeping us busy and awake at night for the last 2 to 3 years in Europe, where lots of regulatory and supervisory expectations were mentioned in this area, and banks are heavily looking into how to deal with this. Then to conclude on that slide, it's also important to include ESG aspects into your client dialogue, not so much only on the wholesale side of things, but also on the retail side of things. We are seeing a huge demand for sustainable investment products, and this is something where clients obviously have to be asked what their preferences are, and you have to adjust your product offering accordingly. A very important point is obviously also reporting on both ESG impact and ESG risks. This is where we've seen huge developments over the last few years. ESG reporting has historically been a voluntary act. Going forward, it will become more compulsory and will slowly merge with the established financial reporting. This is something that we're going to be seeing in the next few years. And finally, that's a very important topic around ESG. For most of the fields of play that I mentioned, data is key. Data that you probably don't have as a bank as of now, data you will ask your client for, or data you might need to source from external sources. So looking at this house, it's very important to get your ESG data management right and to see this as a topic that is basically transversal to all the other topics that you're dealing with. How has the market been evolving on the next slide? Well, I'm talking about very much the European view now. We started looking into ESG about 3 to 4 years ago, 2019. This is where the first banks realized, okay, this is important for me, important because my stakeholders want to see movement, and important because it might be an opportunity for me. So this is where the first banks took a stance, communicated their ambition, was very much marketing oriented. But some gained a bit of market share because of their strong pro-ESG movement back then. And then it was towards the end of 2019, 2020, when obviously on the European level, but on the global level, regulators and supervisors really started looking into this topic, in particular into ESG risk management, climate and environmental risks in the focus. And this is what we've been dealing with since. ESG risk was, and it still is, a key priority. Now reporting has become more important, and throughout this whole cycle we always have been looking at obviously the opportunity side of things, at innovative products, at the question of how to interact with your clients going forward on ESG, which clients to actually serve, and this is a discussion I am expecting to continue also going forward. So what's on the horizon? ESG will become, and this has been said before, a key corporate value driver. It will affect cost of capital heavily. I strongly believe that. It will become more of an audit subject going forward. And as I said, financial and non-financial reporting will be merging at some point. And I also believe currently we're having the focus on the environmental side of things, on the climate side of things very much. I believe the social aspect of ESG, the S, will become more important going forward. So how do we deal with ESG at KPMG on a European and on a global level? First of all, we are heavily investing in the topic. We believe this is one of our key topics, if not the most important one for the years to come. We've committed to a $1.5 billion investment into our people, into talent, into our solutions, but also into alliances with clients and also external partners. Speaking of the financial services sector, where I'm taking a leading role in Europe, we've had to deal with some, let's say, framework conditions, because we pretty soon figured out that ESG is a new topic, but it requires existing competencies. You still need people that know how risk management works in a bank, that know how reporting works in a bank, that know how the products work. And all of these people need to basically get the ESG knowledge on top of their existing skill set. And this also means that basically we don't really have to do so much new solution development. We have to kind of adjust the solutions that we're already having in those spaces where ESG has an impact on. And also it's very important for us that we address our clients with a holistic approach. It's not enough to speak to clients only about climate risk. It's important to show the big picture of how all the elements of ESG play together. And this is one of our key priorities, to have this holistic approach and have a joint go-to-market with each and every client, but also across countries. So our overall goal is to shape the future as KPMG with you as our clients and be a trusted and holistic advisor for ESG and sustainable finance. And what we are bringing in here also on the global level is obviously the international perspective, and I'm very much looking forward to engage with more of you going forward, also for the African market, and to transfer the knowledge that we've been building in other regions that are a bit more ahead, because the pressure is higher into your market. So looking forward to the discussion later, and talk to you soon.
Thank you very much, Christoph, for that wonderful insight. Indeed, sustainability affects banking in the whole value chain. And you've talked about key pointers on there, and I hope our participants are benefiting from that. Just to transition us into the next session, next poll question is on the screen. What factors would motivate your adoption of ESG faster? Pick any two most relevant to you. Is it the presence of standardized framework for ESG performance goals? Is it regulatory support and incentives, access to expert support and guidance, presence of data case studies to demonstrate the value of sustainability? Or finally, but not least, is it the perceived financial benefits from ESG implementation and innovation? Voting starts now, please. I expect 100% participation. Please vote. Thank you. Thank you very much. Keep them coming. Very nice. We can do better. Okay, getting better. Thank you very much. 62% of us are saying presence of a standardized framework for ESG performance would be the most factor that would motivate adoption of ESG faster in the bank, followed by 33% of you saying access to expert support and guidance, and 23% and 25% and 23% of you are saying presence of data case studies to demonstrate the value, and final 37% of you say perceived financial benefits for ESG implementation. Thank you very much. That's very insightful. To move us to the next session, we would like to hear from KPMG East Africa perspective. And with us is Mr. Edgar Isingoma, who is a partner and head of our KPMG Impact, ESG, and our IDAS business in East Africa. IDAS is International Development Assistance Services. He has keen interest and has done a number of design and management of high impact programs, true value assessments, technical assistance, and economic and social impact. I do confirm he has a passion for ESG, and given his background and the business he runs, he has over 30 years of experience to bring more insight into this. And he is a co-chair of the economics and social development pillar under the KPMG Impact. I can go on and on, but it's my pleasure to invite you, Mr. Edgar Isingoma.
Thank you so much, Bernard, and confirm you can hear me.
Yes, clearly proceed.
Good. Delighted to be here this morning to be able to share our insights as KPMG and be able to participate and be able to shape the agenda in ESG. Christophe has given us a global view and the banking sector view, and let us now move to the East Africa region, and maybe also we'll touch again the global view and all that. At KPMG, annually, we undertake what we call the CEO survey across the globe, and East Africa is included in that survey. And when you look at what East Africa CEOs are saying, they have a dilemma in terms of how do you positively connect the benefits of ESG to the top line entirely in the organization. And some are saying it's going to come with to increase financial performance. Others are saying it's actually going to impact negatively on that. Also regionally, we are seeing people are struggling to articulate. Institutions are struggling to articulate a compelling ESG story that will help them to be able to benefit from ESG arrangements. And throughout enterprises, are also not able to be able to integrate ESG holistically. The situation is actually rapidly moving on, and banks will need to respond to this challenge. As Christophe has said, banks are at the center of our economy in terms of intermediation, in terms of providing financing and all that. So the CEOs, there needs to a shift in the mindset is really required in terms of how we understand the global trends, bring them to the regional level and national level. And I'm glad Christophe has told us what is happening at the global, what is happening in the EU. EU last year came with the Corporate Sustainability Reporting Directive, which has huge implications on organizations. And indeed, that's why we are here today to talk about such implications and what is happening here. It's a complex landscape. It's new. And some of the key challenges we are seeing as a result of this, what is happening regionally and globally, we see fragmented landscape with choices to make about how to respond and how to disclose. How do I do that one? There's lack of clear and consistent guidance on how to respond and how to measure metrics, which KPIs do we measure, and all that. And especially the S is something which is really happening, and people are shifting so much now towards the S. There are challenges of gathering and understanding the data needed to confidently report in terms of your metrics, and varying views on what is material risk, especially now where we are going. In East Africa, if you could go to the next slide, we have seen a regulatory landscape with regards to climate change. Climate disclosures, ESG-related reporting have evolved over years. And indeed, the Paris Agreement, which was forced in 2015, has had an impact. We have seen central banks, especially when we talk about Central Bank of Kenya, issuing guidance on climate-related risks. We have seen Nairobi Stock Exchange on ESG disclosure guidance manual, released in November 2012 with the support of the Global Reporting Institute. We have seen the Capital Markets Authority in Kenya issuing stewards and corporate governance codes issued in 2016. The 2018 report on the state of corporate governance of issues of securities identifies that disclosure and transparency practices are one of the areas which are needed to improve. Going back to 2015, the Kenya Bankers Association established a set of standards in terms of sustainable financial principles to serve as local specific voluntary guidance, which will help in terms of sustainable finance. Dar es Salaam in Tanzania, the stock exchange joined the United Nations Sustainable Stock Exchange Initiative in 2016. But also, we are also seeing sustainable financial initiatives which are happening elsewhere. By late 2021, the Nairobi Stock Exchange and the Central Bank of Kenya have moved to mandatory reporting for climate-related risks in case of CBA and broader ESG disclosure on the Nairobi Stock Exchange. The CBA guidance now requires banks to assess and manage risks, disclose climate-related information as part of annual sustainability. And indeed, as banks now, as we see all that, we submit quarterly report on the implementation of the strategy, and while other countries in the region have not taken a step, we can expect a similar trend with similar across the region. And to us, really, these are issues we need to be able to discuss. There are risks, the opportunities, and the banks are at the center of all this. If we could move to the next slide. The shift towards ESG mindset needs to be understood from global level. As you see, the global initiatives which have been articulated, and there are also local requirements which have just gone through right now. But what I would like to focus now on is moving the key challenges that actually banks are facing. And as I said earlier, fragmented and a complex landscape. There are scattered initiatives and standards which increase complexity and result in a lack of comparability of disclosure across organizations. Because of lack of standards, that's what we are seeing. Yes, ESG is an economy-wide issue. Banks are at the forefront of reconciling sustainability and the economy, given their central role in facilitating economic activity. And that's why we are here this morning to talk about this so much. So how do you really do this? Sustainability requirements are increasing. Insufficient ESG data quality is another issue which we are facing. Lack of guidance on the KPIs and metrics, which also, as much as possible, affects comparability. How do you compare who has done what and all that? And the definition of material, climate risk is another one. We will go on and on, but I would like us to move on and see how do we get started if we are able to move on. In the next slide, please. Can we move to the next slide, please? So to me, sustainability, not just climate, is rapidly gaining importance in society and increasing awareness of issues such as climate change. Social inequality and corporate misconduct is changing in the market and in the environment rapidly, and we must be able to move on and see how best these can be addressed. Investors across the globe are showing a great increased demand for sustainable finance products, and sustainability and corporate products are influencing the reputation of business and business success and even of financial institutions. So what do you need to do? What really do you need to do? What can, in terms of this, banks need to be able to articulate the aspects which Christophe has talked about. In terms of the strategy, they need to provide the basis for effective implementation of a given framework, establish guidance for mission and vision, objectives, and set the tone of the new ESG framework. And to us, this is very, very important because understanding the requirements and opportunities at that level means a lot. The ESG strategy must be able to be coined out, and the governance arrangements must be very, very clear. Who is responsible for what, and the strategy in terms of the KPIs is very important. So defining the governance model, internal controls, and role of the board. For us, we see that Because ESG is a sustainability matter, is at the center of the success of the business. And as Christoph has said already, that it is a topic of the decade, if not the topic of the century. And for banks, it impacts the entire value chain. It must sit at the corporate, at the board level. The chair of the board needs to have responsibilities in terms of how to shape the ESG agenda in the organizations. And there need to be committees that are responsible for this ESG as an important and a cardinal at the center of a strategy of organization. ESG is no longer something of corporate social responsibility, something good to have, or the stakeholders are demanding. It's actually survival. It's a sustainability matter. It is what we have to do to ensure that we move ahead. If governance arrangements are not working very well, an organization can easily be put down. Looking at the social media, what has impacted, whether in the US, whether in Africa, if something bad happens, something spreads very fast, it can affect your bottom line and all that. I've seen World Bank refuse to finance projects because of miners who have been assaulted. We have Europe. It has been packaged the whole oil business to ensure that now it can actually, I hear I've been lost. Am I clear now, Bernard? Am I being heard?
You are back. Thank you. Proceed.
Okay. Because I keep monitoring to see if I was saying that in terms of the impact of this ESG, as you look on what you need to do, there are negative effects, there are negative implications if you don't put ESG at the top of the agenda. And as banks, there are so many projects are not being financed because they're not integrating ESG. And I've seen the East Africa crude oil pipeline has had to be repackaged to have a renewable component to be able to attract financing. The processes of implementing ESG have to be clear in organizations. It has to be communicated, and the organizational structure has to be an appropriate structure that will help you to be able to implement the ESG agenda in the financial institutions or in your bank or in any other businesses. Because now, as we talk today, ESG affects all sectors equally. All organizations are impacted, not say financial services, but all sectors will be impacted. So as banks, you need to define your strategy, you need to have your governance arrangements prepared, you need to have processes that are clear and detailed and aligned with the organization missions. You need to have an organization structure that recognizes that ESG is now central and the core to the business sustainability and the performance. And you have to communicate this effectively to your stakeholders, including employees, financiers, suppliers, customers, and report on this with a view that it can actually be credibly assessed that these are actually the actual things which you are doing on. It's not just someone going to report on that. Next slide, please. So for me, as we look at this as KPMG, as we get started, as I have already said, the governance, determining who owns various ESG-related activities is critical. Identifying the risks and integration of these ESG risks and their materiality in the entire business models and strategies is critical. Because not every ESG aspect has the same impact and materiality effect on performance, on sustainability as otherwise are the same. So you need to identify these risks and say, These are the ones which are going to be able to affect us most. This is how we're going to manage them. This is how they impact our strategies. And once you have done that, you do a risk assessment, and management tools have come in. Determine the impacts identified of risks and how they could be generated under various scenarios. Scenario analysis is very critical at this point for you to know if this went this way, what could happen? Is it an ESG which is impacting our supply chain? Is it ESG impacting how we sell? Is it the one internal and all that? And then reporting and disclosures. Choose the right reporting approaches and frameworks for your business. So as I go on to conclude, ladies and gentlemen, in terms of my marks, next slide, please. Really, ESG, as I've said, is central to everything that we do, and it has huge, huge benefits. And that's what
Edgar, we are losing you.
why we are early enough, it could actually be an aspect which we are going to affect us. I hear I've been lost again.
You are back.
Bernard, am I back? Okay,
You are
good.
back.
Good. So how do we really benefits of integrating ESG across businesses, across banks, and all that? There are huge benefits of this integrating. As we saw earlier, in East Africa, indeed globally, many firms still trying to work out what are the benefits. Of a clear ESG strategy there as you're going to implement, because you're going to overhaul your business, you have transformation costs and associated costs with that. But to us, there are benefits: decreased cost of operations, lowered costs through sustainable sourcing of other financial arrangements related to ESG. We see that's going to be a huge benefit because you are compliant. There are going to be lowered costs of operations. Enhanced capital access, better access to capital sources at a more favorable terms. We are seeing if there's green growth, you are likely to get better terms in terms of sourcing capital. You are likely to get even not only credit, but even equity. People who want to invest in your business because they believe that the business is a business which is ESG compliant and it will address the people, the planet, and the prosperity appropriately. We will see improved investor sentiments, viewing your organization as engaged with the key ESG issues or what matters society now is what you are addressing. And this is something definitely which is good for the organization. And as you become ESG compliant, as you integrate it at the core of your strategy, of your processes and businesses, it becomes integral into your business, we'll see a reputation improvement. Because you're addressing all the ESG aspects, heightened reputation from existing and prospective employees, customers, suppliers, investors, the public itself, because they see that yearly you are compliant, you're not destroying the climate, you are actually improving the climate, you can increase actually from the improved reputation, it actually positively relates with your performance as an organization in terms of top line, in terms of bottom line, because of that reputation. And that reputation is so important in
Edgar, we are losing you again.
As you are aware. You can and not be now who matters, who has a day. This is an important aspect. Bernard, I want to stop it there. I want to thank you, members. for all the opportunity to be able to talk about this, and let's be able to interact in the next session. Thanks, Bernard.
Great. Thank you. Very, very useful insights, Mr. Isingoma, and I'm sure our participants are benefiting from such insights. What is coming out, ESG in strategy, ESG transforming governance structures, ESG in risk function transformation, how measurement and reporting of ESG issues in the business is going to be key, and also auditors are aligning themselves to provide ESG assurance. So quite a lot of work cut out for us in the banking sector. I would like to invite Catherine. We bring the message from our CEO, Chief Executive Officer, Senior Partner, who is committed and driving the ESG agenda in our KPMG business. Catherine?
The devastating impact of environmental, social, and governance issues to the world are clearer today than ever before. That's why we at KPMG are committed to strengthening our global ESG offerings, underpinned by the recognition of our responsibility to help build a better future for all. We have committed to be net zero by 2030. We are committed to a better tomorrow with a $1.5 billion multi-year investment program in our ESG change agenda. ESG is a watermark running through our global organization, from empowering our people to become agents of positive change to providing better solutions and services to our clients. We believe we have an obligation to support the communities we serve while helping to drive measurable change that has an impact. Our strategy is designed to support our clients in making a positive difference. As a firm, we want to drive positive change in the world by putting the environmental, social, and governance agenda at the heart of everything we do at KPMG. Looking at the world today, the issues we face present existential challenges not just to businesses, but to the entire humanity. Your stakeholders as a business are demanding exceedingly more. Consumers and employees have increasingly different expectations of the world and of the business they buy from. Regulators and the market in general are putting shareholders and lenders under immense pressure to prove that they are acting responsibly and investing sustainably. As we face the future, all these stakeholders will be making choices of the organizations they work or relate with. Each of them is looking at these challenges through their own lens. It is for you as a business to understand what is behind it, and that is by reviewing a number of dimensions. What is your business impact on the environment? What and how do you contribute to the communities in which you operate? How do you conduct yourself? Ultimately, ESG is everything you do and how you do it. It is your license to operate, and this is your opportunity to lead. Your ESG strategy must be authentic, embedded in your business strategy, and owned fully by your board. Your ESG narrative looks through your entire business and tells that story to the world. The ESG matrix, on the other hand, helps people to compare you with others, and that is primarily through a rating. You need to look at how you conduct yourself as an organization, including the ethics around your supply chain. How inclusive is your business? Are you well governed? And is your leadership diverse and set up to hold the business to account? In other words, you need to look at your business 360 degrees. What is the impact on climate change, the natural resources that you use, the waste that you produce, and how you handle it? Do you have and practice responsible tax policies? Do you pay your fair taxes? Do you treat your customers and suppliers ethically? Do your employees have fair and safe working conditions? Most importantly, can they speak up if they spotted something wrong? As a business, you need to understand where you are doing well and also where you are vulnerable so that you can begin to take action and make it better. People will expect you to set clear targets and have the data to measure your progress and report it to the world. They want the assurance that what you do, and which is invisible to them, is adequate and can support your performance. Overall, your metrics will encourage investments and capital inflows into your business, while your narrative will talk to your stakeholders. Ultimately, you will have a resilient business well set to thrive in the new reality. You will be playing your part in making the world a more sustainable, fairer, and better place for everyone. It is the right thing to do. Thank you.
I hope the message from our CEO and senior partner, Benson Dungo, has helped you see further insights on what KPMG is doing to respond to the ESG agenda. This moves us to the last poll question that, having listened to the earlier speakers, how would you like to respond to this? If I can get the poll question, please. Okay, so what do you think are the greatest challenges to addressing ESG as a strategic issue at your company? Is it the pressure to deliver short-term quarterly results? Or is it ESG issues are disconnected from core business processes? Is it ESG is viewed as a soft brand marketing issue? Is it that senior leadership does not recognize the value of ESG to long-term performance? Or is it lack of ESG data? And finally, but not least, lack of awareness on ESG risk management. I expect 100% participation on this question. Please send your votes. Voting starts now. Excellent. This is going fairly fast. We appreciate. Keep voting. And as you vote, please, this webinar has got very senior leaders in the industry. We'd like to receive your questions and comments. Please use the Q&A chat box below on your screen, and we'd like to hear your views. Okay, keep coming. It's better. We can do better. A few seconds to close. Wow, this has got varied views. 29% of us saying lack of awareness on ESG risk management. Beautiful. We've talked about ESG and risk function transformation. Lack of ESG data, 22% of you say. Senior leadership does not recognize the value, 12% of you have voted, and then 14% saying issues are disconnected from core business processes. That's very useful, and combining with the messages, you can see where the effort is required. And to enable us now get to the point where we hear it from those who are really experiencing the clients we work with and the industry leaders, it's my pleasure to introduce the panelists. Today, we are privileged to be joined by Dr. Habil Olaka, Chief Executive Officer from the Kenya Bankers Association, Mary Wangari Wamai, Group Executive Director, Equity Group Holdings, Stephen Hamia, from the Chief Internal Auditor, Uganda Development Bank, and our own Tracy Lane, Associate Director and our Head of Climate Change, Renewable Energy and Resilience in KPMG East Africa. Our panelists have got very rich CVs. I might not introduce all of them in that great CV, but I will try my best to introduce them. So Dr. Habil Olaka is the CEO of Kenya Bankers Association since his appointment in October 2010. Before joining KBA, he worked at East African Development Bank as a Director of Operations based in Kampala. And before that, he served in Kenya in various capacities, including Chief Internal Auditor, Head of Risk Management, and Resident Manager in Kenya. Before East Africa Development Bank, he was an internal auditor at the Banco Indo-Suisse, I hope I've pronounced properly, Bank of Africa, currently called. He started his career at PricewaterhouseCoopers, where he worked in audit and business advisory. He serves in several boards representing KBA, just to mention Kenya Deposit Insurance Corporation, Higher Education Loans Board, National Research Fund, Federation of Kenya Employers, Anti-Money Laundering Advisory Board, board member at National Housing Corporation, and he also serves as chairman of the board at Center for Corporate Governance in Kenya. And at the same time, he's the chairman of the Public Finance Sector Board of KEPSA. He is an alumni of Strathmore School of Accountancy and is a certified public accountant of Kenya and a member of the CFA Institute. And I think without much more, welcome Dr. Habil to this particular webinar. Our next panelist is, let's move to the next, is Mary Wangari Wamai, who is the Group Executive Director at Equity Group Holdings. Mary holds a master's degree in leading innovation and change from York St. John's University, a Bachelor of Laws degree from the University of Nairobi, and also a diploma in law from Kenya School of Law. She's a certified public secretary and a member of the Institute of Certified Public Secretaries of Kenya and a member of the Law Society of Kenya. She's also one of the members of the International Commission of Jurists and Women Corporate Directors. As many of you know, she won an award recently, and we congratulate you for that, Mary. The group, Equity Group, has continued to invest in social and impact investments that have enhanced the growth of its customer numbers to over 16.1 million by the end of 2021. So transformation and modernization of agriculture through agribusiness activities, microbusiness enhancement through financial literacy and entrepreneurship, training, inclusion through social payments, and development of ethical leaders through scholarships under the Wings to Fly scholarship and Equity Leaders Program are just a few of the several initiatives that Mary leads in this regard within the Equity Holdings Group. In 2022 and beyond, Equity Group has positioned itself to take advantage of the opportunities associated with Kenya becoming the hub for financial services, and we will hear more of this from Mary Wamai. She has grown into the bank and grown the bank. They have 7 subsidiaries in Kenya, Uganda, South Sudan, Rwanda, Tanzania, and DRC Congo, and currently Ethiopia. And I can't read all this, Mary. You will tell us more about them, but feel most welcome, and thank you for sparing time to be with us. Our next presenter is Mr. Hamia. Mr. Hamia is the Chief Internal Auditor, Uganda Development Bank. Stephen has been in the bank since July 2014 and is consistently proving to be an invaluable asset through his compassionate engagement of the UDB management in strategic projects and key initiatives that continue to improve and preserve organizational value. And Stephen works with the credit team in rolling out credit risk scoring model for SMEs, and his guidance within the bank on the parameters and related inputs has transformed the bank in operations. And you have heard how the previous presenter talked about in the loan process in the business. He was pivotal in the bank's implementation of various projects, including IFRS 9, where he was the key leader in ECL model, ESCL model formation. Prior to serving at UDB, Stephen worked with Ernst & Young in Uganda as an assurance senior manager, where he dealt with quite a number of projects of which have been outlined on this. Without much ado, Mr. Stephen, I'd just like the time to read the whole of this, but feel most welcome and enjoy the webinar. Our last presenter is our key experts on matters of climate change and renewable energy and resilience in KPMG East Africa, Madam Tracy Lane. Tracy joined KPMG to drive the ESG agenda and has worked with a range of public and private sector partners in sectoral climate change innovative initiatives, environmental and social impact assessment and risk management, renewable energy, decarbonization, circular economy, and policy and regulatory drivers for private sector-led sustainable growth. Tracy is also part of the KPMG East Africa ESG leadership team, where she works with clients to assess risk and opportunities related to environmental, social, and governance issues, including climate change as well as strategy and reporting. And she will be very critical on helping the banks understand the requirements of the climate risk change management within the banks that has been issued by CBK. Tracy, I just lack the time to read more of this, but do appreciate you and looking forward to sharing more. Should I have forgotten something, just mention it during your session. All right, so having done that, I would like to invite all the panelists to join us. Please just pin Habil as well. Okay, I can't see Mary. Excellent. Please pin Mary. Good. So I don't know what you feel after hearing all the previous speakers, and I just want to give each and every one of you 1 minute just for comments and introducing yourself briefly to the team here. And I will start with Mary, not in any order.
Thank you so much, Bernard, and thank you for inviting me to the panelists and the executive at KPMG and all the partners. It's really wonderful to be in this forum because I do believe that ESG is the business and ESG risks are the business risks. You cannot separate those two. And I love the title, Integrating ESG into Business, because I think one of the things that we have had to deal with is the disconnect between the business, what we think we should be doing on a day-to-day business or on a day-to-day basis, and the ESG principles. And sometimes we forget that there should be no separation between those two. It should actually be what we do every single day. So I've been with Equity now for close to 20 years. As some of my friends, the young ones, ask me, what? You've been in one place for 20 years? Don't you have anywhere else to go? But I tell them there's so much to do. I mean, if you are to do environmental, you do social, you do governance, there's quite a lot to do. And I'm really happy to be in this forum. And I hopefully will be able to talk a little bit more about the topic and the discussion after everyone has introduced themselves. So it's a great pleasure for me to be here today. Thank you.
Thank you very much for that. It's the same question young people ask me, 19 years, 20 years at KPMG. All right, we will get more from that. Allow me to move to Dr. Habil. Dr. Habil, over to you.
Yeah, thank you very much, Bernard, for this opportunity for me to join this esteemed discussion group. Now, I don't have as rich a history in terms of number of years at KBA. It's only 11 years that I've done here. So I'm still shy of the records you have set. But nonetheless, I think the topic of today is particularly very crucial, and especially the role that KBA has played. Edgar mentioned in his presentation about the Sustainable Finance Initiative that is at the KBA. And this was a way of trying to align the industry to ensure that we address our ESG risks and opportunities. So we came up with some guiding principles because we realized that we need to have some level playing field for the banks to be able to operate in that space. So we came up with some guiding principles. And then under the Sustainable Finance Initiative, we also created a capacity building framework so that we have got, for example, an e-learning platform that enables banks to be able to incorporate those guiding principles in their day-to-day operations. So in a way, I think I look forward to this discussion because it fits squarely into what KB is doing. Thank you.
Thank you very much, Habil. You may not have accumulated many years, but in the sector, you've done more. Thank you. Let me move to Mr. Stephen. Hamia, thank you very much for joining from Uganda. Please take over.
Yes, good morning, everyone. Thank you, Bernard, for this opportunity to be before you all. And yes, I've been with the bank for coming to 8 years now. And I've been serving really in an advisory capacity as far as this ESG agenda is concerned. Yes, I'm in audit, but I've been supporting the bank in terms of integrating the ESG agenda into the entire business operations. And being a national DFI, of course, we feel we're at the core of this agenda in trying to advocate for sustainable financing of projects, especially within Uganda. So I'm looking forward to the discussions with the rest of you. Thank you.
Thank you very much. Last but not least, Tracy Lynn.
So hi Bernard. Thank you for the introduction earlier. I think you did it justice. I don't have much more to add. I just want to say I am very happy to be on this panel today. As my colleagues mentioned earlier, KPMG is really placing a lot of importance on this issue, in line with society placing a great importance on this issue. So I think it's a very timely discussion, and I'm happy to be a part of the conversation today.
Thank you very much, Tracy. Now, a warm welcome to all of you. Just to get us going, you've had, and the insights that are coming on the ESG, and I'll be engaging you in the next 20 or so minutes to just get your thoughts on a few of the areas in at this webinar. Now, I want to come back to you, Mary, with a lot of work that Equity Bank is doing. The question I would like to pose to you that, and even you've seen it in the poll, what has been the driving force behind Equity's decision to focus intensely on environmental, social, and governance issues? Because we see a lot is happening. You are doing it naturally, and it started long time ago.
Thank you, Bernard, once again. The answer is very simple, because we first of all identified as what is the purpose of the organization. And the once that was done, and remember that for any business, the purpose, the mission, the vision should actually be the basis of the strategy. It is actually the first thing that you define as a business. So once we identified the purpose, and for you who are familiar with the purpose of Equity, it is the transformation of lives and livelihoods and putting the people first. Then, of course, we also did the DNA of the brand. What does the brand Equity stand for? And what we realize is that equity is all about people, and people in different capacities and in different contexts. So you have different stakeholders. We have our customers on one side. We have the employees on the other side. We have the other stakeholders like the investors on the other side. It's all about people. We have the public and communities with different needs. So we said, what do we need then to do to be able to deliver the mandate that we have? And the question that the board and the management has to ask every day is, what is our mandate, which is derived from the purpose? And Equity found its purpose in transformation. And then the next question we asked is, then how do we deliver on this purpose? And we identified several areas and several pillars that we can focus on, but these are also driven by the needs of the people on the ground. If you look, for instance, at the initiatives under the foundation, which we later set up as a vehicle for social interventions, it's all about leadership and development and education, because that is what our youth need. Then when you come to the business people, we are dealing a lot with the small businesses. What do they require? They need financial literacy, they need entrepreneurship training, and those are the programs that we have rolled out. And then, of course, on the E part of it, we are talking about energy and environment. We have planted more than 36 million trees so far. We are supporting customers and communities in various groups with the water tanks, clean energy solutions, et cetera, and supporting them through. But then more importantly, when you talk about risk management, ESG as a tool for risk management, which it is in a very broad perspective, we have focused a lot on building the structures, creating the right policies in the workplace. We recently just refined the code of conduct, the ethics and compliance policies. We have rolled out the speak out policies so that everybody in the organization, including our customers, and the public can get to us and tell us, we are happy with this, or we are not happy with this. Can you check this one out? Is there some corruption going on or other unethical practices in the organization? All those things are very, very important when it comes to employees, engagement with them, setting the right workplace practices, and ensuring that they are observed at all times by everybody. And of course, there's a filter up to the board in terms of, because the board is supposed to provide oversight to see whether we are doing the right thing as management teams. So the board will receive the reports every quarter. It's an item on the agenda of every board meeting. How are we doing on the 3 pillars of ESG: environment, social issues, and the impact we are creating, and of course the governance aspect. And I would also want to say that, Bernard, for a business, ESG, I don't think is voluntary now. It is mandatory. You have to do it, because if you are not doing it, then what kind of business are you running? We actually did not wait for the regulators, and I like that Joseph went through the regulatory changes that are happening, and I know Habile is also working a lot under the Kenya Bankers umbrella to just look at what do we then need to do to just ensure compliance with ESG. I don't feel that that's an item that we should wait for regulation, because it's something we have to do. One of the other incentives that I see now, and one of the speakers before talked about the financial incentives, we have actually benefited from ESG, because when we got a loan with one of our lending partners, they gave us an incentive and said, this is where you stand on ESG. This is the rating we have given you. It could get better. So if you get better to this other level, we are going to give you a better interest rate. So start on this one. And then once you achieve that one, we are going to lower the interest rate. And we did achieve that, I believe, last year, 2021 or 2020. So we are now on a lower interest rate because we have achieved a higher rating. So there are many benefits, even financial. We are talking about getting carbon credits for the work on energy and environment. So we can only say that we are very happy to be doing what we are doing. And then, of course, we also have to decide what culture we want to create in the organization. And for equity, we have chosen to create the right culture so that everybody is passionate about ESG. If you take the Wings to Fly program, which is the scholarship program under the foundation, the branch managers adopt the children that we are sponsoring like their own children. And the managers in the business, they adopt, they visit them in school, they escort them to school, especially those in Form 1 and they don't know their way around. They go and check whether they are okay. They check the performance like parents would check, you know, the report forms and all that. So basically, you get everybody in the institution to understand why they need to do these things and become passionate about doing that and really supporting the community in different ways, whether it's the children, whether it's the entrepreneurs, whether it's the environment. Every branch has the mandate to just check in our environment, what can we do? And that's an open check for them. We'll approve the budget for them. So it becomes a culture that everybody likes, everybody enjoys doing these things. And at the end of the day, it's a win-win because we said we'll focus on doing the right thing, doing good. But in the process, we have done very well. As you have seen from the financial performance of equity, I can say that we have done extremely well, not because we set out to earn a lot of money, but it's because by just observing the principles of ESG, we have been able to create a very sustainable organization, create a very strong brand, whereby customers are actually very happy to support us on the commercial side. And we have been able to align the commercial engine of the business together with the social engine of the business and integrate them seamlessly. And it's a win-win. So thank you so much.
Wow, thank you so much. That is so insightful. we do observe equity releasing the results, and it keeps on growing stronger. And this reminds me of the writing in Paul Mann's book, The Net Positive. That's really coming out very strongly. And I think it has emphasized and brought home the key messages that have come from the previous speakers. And I think the participants listening have, if not started, we have to start. We cannot wait for regulators to bring legislation to just start complying. That's very useful. Abil, Dr. Abil, from where you sit working with the banks and from the association, I'm sure you have the lens to monitor what is happening. And Mary has talked passionately about what they do. Then how does them integrating ESG impact on financial performance of an organization? We see equity already enjoying that.
Yeah, thank you. I think Mary has virtually given quite some good pointers to that question. And I look at it from the perspective of an organization being a bank, or at least in the financial services sector, and therefore try to see how integrating the ESG impacts on its financial performance. And as you know, actually the good financial performance of an organization greatly hinges on the quality of its decisions, on how it manages and mitigates the risks that are associated with its activities. Banks usually face a number of risks, be it financial, physical, or liability risks, if they fail to embed the ESG considerations in their lending practices. I look at it from the perspective of the impact on the lending practices and also the impact on itself as an institution. Because, for example, on the environmental front, it's evident that climate change is one of the most defining concerns, especially at this time in which we are. And that affects not only the institutions to which a bank lends, but also to itself as well. You know, and so banks will greatly be affected when the client's operations are adversely impacted by the climate change. We have seen, for example, increasing occurrences of flooding, of drought, of the changing in the rain patterns, especially in this region, and unexpected fires, not so much in our region, but you have seen it elsewhere on the globe. All of these as a result of the climate crisis. Now, one of the critical things is the fact that when an organization is affected by or impacted by the climate change, what happens is that its ability to generate cash flows, to be able to repay its obligations to the lender are diminished. So we then have occurrences where you have got assets that are stranded, and by that we mean either the assets are not able to generate the necessary cash flows to be able to repay its obligations, and then two, banks use those assets as collateral. In the event that there is inability to repay, there is a fallback position on those assets. Now, if those assets are in any way deteriorated or lost in terms of value, then the bank is at risk. So you can see that the impact of this on the operations of the bank, either by the inability of the lender to repay, or in terms of its own asset base being severely affected by the climate change, is something that banks will need to be completely in control of in terms of managing that risk. But also there is another angle as well. I mentioned about the liability risk. And this may arise when a borrower's activities leads to penalties or legal recourse for not adhering to, for example, environmental laws, which indirectly or directly affects the society. So you find that, and this could either impact the customer, in which case the customer is either penalized, and that may lead to the customer being unable to meet the obligations to the lending institution. But also there are other risks as well. There's a reputational risk that comes with such penalties for lack of compliance to either the environmental or any other laws that are in the ESG arena, and therefore impact its cash flows in terms of repaying the organization the lending institution. Now, the lending institution as well may also face penalties and other legal recourse for its own inability to comply with the law, be it environmental law or whatever it is. So in all this, I think we look at both the impact on the borrower and the ability to meet its obligations, and the impact on the institution itself in terms of its obligation as a corporate citizen. And also something else that becomes quite critical is that to manage and mitigate these risks, banks are called upon to integrate the ESG frameworks in its governance structure. That I think has come out quite clearly from the discussions from the previous presenters. The policies in place should clearly require a rigorous risk assessment procedure. And with the ESG framework in place, banks are then able to attract sophisticated investors into its portfolio. And by this, the basic thing is that banks actually trade on trust. And it is by complying with the ESG requirements from the society that you then are able to build that capital in terms of trust, and therefore be able to attract the necessary investors in its portfolio. Banks are frequent issuers, for example, of corporate bonds. Currently, we mainly have what we call the vanilla bonds, but as time moves on, and as I mentioned about sophisticated investors, they have got different tastes, and a number of them are becoming very tasty in terms of going for other non-vanilla bonds, like, for example, the green bonds, the social bonds, sustainability bonds that are having specific aspects where investors are looking for specific attributes of the issuer of those specific bonds. And for a bank to be able to attract this kind of funding, it necessarily will require to abide within this framework to the ESG requirements. And you can keep a number of examples on how this can eventually impact on the financial performance of the institution. And in this particular case, we're looking at an institution as a bank. Thank you.
Thank you very much, Abil, for that particular insight. And I like the fact that you're bringing it from the risks that an organization is exposed to and how that ignoring those risks ultimately impact on the performance of the bank. Some people have viewed it as an expense, therefore thinking if you spend money today, then it will reduce the performance. But I think that is very, very well good insight for us. I'd like to just hear the views from Tracy on that question.
Thanks, Bernard. I think Habil gave a very thorough and excellent answer to that. And I think this is obviously a question on the mind of a lot of CEOs, as we heard earlier from Edgar's presentation. The costs of integrating ESG are a major concern. And I think what Habil touched on there is one way of looking at it, of course, is there's the cost of not integrating ESG into your organization. I think there's sometimes a tendency to view ESG as perhaps primarily a reputational issue rather than a source of financial risk. But ESG issues do pose a financial risk, especially climate issues, but all other issues as well. Think about the costs of increased disasters. Think about the impacts on the various economic sectors that are covered through your portfolio and what are the impacts on them and their ability to pay or repay loans. Also, I think another aspect that we need to think about is that costs related to ESG and related to climate in particular can be an investment that pays off. Many ESG activities bring a clear financial return, for example, investments in energy efficiency or investments in renewable captive power for a manufacturing entity, for example. So there's a lot of opportunity there for financial return, for positive financial returns. ESG investments as well in ESG investment vehicles and products have been shown recently to outperform the market. So that's another opportunity there to look at, instead of the costs, look at the opportunity that it brings. Another example, moving away from climate, looking at gender diversity and inclusion in your workforce and in your customer base. On the workforce side, gender equality initiatives have been shown to improve decision-making within an organization. So that's not a cost, that's a benefit there. So I think it needs to be a slight reframing of that question. And then thirdly, I would just want to add that any ESG strategy is going to entail priority setting and a roadmap and a timeline of activities, and a cost benefit view to that is appropriate, I think. So you might focus on certain initiatives first as higher priorities, and then over time move that agenda forward. So I think it's quite reasonable to consider some cost in that, but do not forget the opportunities as well, and the benefits and the returns on those investments.
Yeah. Indeed, thank you. Very, very useful insights coming from that conversation. And I'd like to quickly just get back to Mr. Hamia. Mary has talked to the various levels of engagement when it comes to integrating ESG in the organization, and Abil has talked to a few of them. What additional information would you like to share with the audience, especially on who should own and drive the ESG agenda in the bank, and how have you ensured that at your bank, the board and executive management understand the ESG agenda? As Mary says, it's not just a one hit, it's not waiting and all that. Over to you.
This, of course, has been touched on by the different presenters. And I think where I come from, without a doubt, the board is very pivotal in owning this agenda, because they set the tone and they're responsible in terms of implementing or setting the strategy of the organizations, and also setting the policy directions of the institutions. So they need to own this agenda because they have a fiduciary responsibility. And this really sets the platform on which the agenda is established. In our case, we had to, at the very onset, had to present to the board what the advantages of embracing this agenda are, and got commitment or approval from the board to actually continue with this agenda because of the resources, the commitment that was required from the bank. In terms of the understanding, I think for us, what was very key and pivotal was the fact that this was mostly internally driven, as opposed to having an outsider party come to advise on what needs to be done. It was an internally driven process, and I think this helped board management as well as staff really understand what is at stake and what needed to be done. But I think more to that, part of the things that we did, part of the initiatives that we did in trying to redefine how we embrace this agenda, I think further helped in board and management really understanding the ESG agenda. So one of the things, of course, being a national DFI, we had to understand why we exist. What sort of benefits do we want to give to our key stakeholders? So we had to develop a power statement that would then drive this agenda. We had to determine the sort of impacts, what positive impacts we want to create, be it in the natural ecosystem, be it socially, be it contributing towards the national development priorities. So we had to look at the national development priorities as stipulated in our national development plan. We had to look at the sustainable development goals and see out of these, where do we create the highest impact? Where can we create a change as far as this agenda is concerned? And out of that, we had three impact areas that we wanted to embrace as an institution. And that was really around poverty, around the food system within the country and, of course, industrialization. So having created that platform, and this, of course, was done with the engagement of the board, management, and other key stakeholders, we had to go back and definitely revise our strategy. Our strategy, I think, prior to 2019 was mostly financial leaning. It didn't have any sustainability aspects. So we had to go back and integrate, the reason why we exist, the impacts that we want to create. We had to go back and integrate these into the strategy. And of course, board being the ones that set strategy, they were heavily involved in this process. And this, in a way, helped them further understand the agenda and what sort of contribution that the bank had to make concerning this agenda. So along the way, of course, having defined the strategy, we had to go and revise our policies. We had cases where we had to develop new policies or revisit our policies, again, just to embed this whole agenda into our core business, not to do them or operate, have them stand alone, but rather part and parcel of the day-to-day activities that the bank undertakes. Also, in terms of management had to indicate what sort of commitments that they would make in terms of contributing towards this agenda. So they had written commitments that they had to make and sign off, giving their contribution concerning the agenda as well. Beyond that, of course, we've had to do a skills gap assessment as a bank, and especially from board and management, just to see in this whole agenda, where do we have shortages or skill or gaps in understanding what needs to be done in advancing this agenda. And that really forms part of the board development process, as well as management. So we know what it is that we need to, in form of capacity building, either internally, also bring on board parties externally to then help us further understand what it is that the bank is supposed to do as far as this agenda is concerned.
Thank you very much for that insight. Ideally, a lot can be said, and we're just constrained on time, and we have to finish in the next 5 minutes. So I will want to quickly just ask your thoughts, and very briefly, you can share your views. A lot has been covered, even in some of the areas that we would have wanted to engage you more. So Mary, allow me to come back to you, and from the experience you've had and what you're doing, what should banks do to produce accurate and informative ESG disclosures that can be relied on for decision making by the key stakeholders that you work with?
Okay, thank you. I think one thing we have done is to understand our position, and I think we found that regular audits in this area or assessments, we've just hired a consultant to just look at us again after about 2 years or 3 years from the last assessment, so that we understand and I think Stephen has talked about, are there any gaps that we need to specifically address, or are there inadequacies that we need to address going forward? That helps a lot, because then we are able to keep on refining where we are in terms of where we want to go, and of course take appropriate measures to be able to get there. And I think we have also found it very, very good, because we are now called upon to also report in the integrated report. We have a full sustainability report, and our aspiration is now to become better and better in reporting, so that our stakeholders are aware of what we are doing. There's a lot of materials on the internet, the website of the group, and other various reports, other communication to the public, press releases and other releases. So there are several ways that we can do that. I think the other thing that banks need to focus on is looking at the various global and also local international and local standards that we need to meet. And I think Habil talked about that. There are ISO standards on social responsibility, environmental management systems, greenhouse cases, occupational and health issues. So all those are important because they allow us to be very systematic in the way we are, first of all, implementing. First of all, the way we do the policies, and then how we are implementing and enforcing the same, and thirdly, how we are reporting the same to our stakeholders. And we are using a combination of those tools to be able to get to the best that we can. Thank you so much, Bernard.
Thank you very much. Thank you very much. So that's very useful. And there's a question that is just coming through to you. I just want to finish it very briefly. So do you think your ESG activities have had a spillover effect on other banks in terms of the benefits? And would you also share the role Equity Foundation and Equity Bank in the delivery of the ESG agenda? I hope you got the questions.
Yes, I did. Yes, certainly. Spillover, yes, because what we have seen now is because of the success of the initiatives that we have carried out under the group foundation, and we have 7 pillars under that foundation. We have seen a lot of not just banks, but other organizations starting similar initiatives with different success levels. And we can only say that this is good for the communities because customers get better initiatives, impact on that. And we are very happy that we have set the pace for that. And I also think that our foundation has been able to identify several areas because even when you listen to the issues affecting any community, it's always the same. Poverty, which is caused sometimes by lack of education or the tools to be able to get to the next level, lack of the necessary education in terms of how do I start my business, how do I grow my business, and the tools that are required for that, of course, the environmental issues. So we've been able to address that, and I can say that the foundation has been a great tool, especially in terms of addressing the social and also the governance and environment, actually all three. I was trying to sort of like identify which one, but it covers all three. And I think, as I said earlier, we have been able to integrate them so that they are part of the commercial business. So if you look at the initiatives in agriculture, for instance, which we are now calling food and security, they are carried out through products and services that are packaged in the commercial bank. So that they create sustainability. But what happens is that the loans are given, but there's an extra addition of training to the farmers, a link up with agronomists who advise them on soils, inputs, things like that, good crop and animal husbandry and things like that. So you integrate all that together with the commercial model and it becomes very, very sustainable. And I believe that is why we've been able to do quite a lot. Right now, we have been able to raise about almost $600 million for the various programs under the foundation. And we can say that we have done very well, although there's still a lot of work to be done. Thank you, Bernard.
Excellent. Thank you very, very much for that information. And Habil, just picking up from what Mary has talked to and the various panelists, there's a question for you from the audience, and I'll combine it with part of a question I have for you. How is KBS supporting banks to come up with a standardized method of reporting? At the moment, it looks like everyone is trying to find their way around it with no proper structure, and the bank seems to be struggling in going down through the implementation guidelines that has been released by the Central Bank of Kenya. Sorry, you're on mute. You're on mute, Daktari.
Sorry, thank you. I hope I can be heard now.
Yes.
Yeah, thank you. I was saying that Mary had touched a little bit on that issue about reporting. As you'll appreciate, integrated reporting is a fairly new development in terms of banks disclosing not just the financial information, but also the non-financial information, and especially on their ESG practices. Now, even in Kenya, if you look at the corporates, a number of them are at different stages. And in the banking sector is no different. So you'll find that there are some who are fairly well advanced in terms of having the financial report and the sustainability report on one hand. There are some that are still at a fairly nascent stage in terms of developing their reporting. And that then behoves us as KBA to help support the industry to come up with some level playing field in terms of their reporting. And also linked to that is the fact that CBK recently issued a guidance on climate-related risk management to the banks. And this is an indication from the regulator of the fact that ESG is important, and therefore they need to start incorporating those in their governance structures. And one of the things that is a requirement of that guidance is the reporting framework. And so as KBA, as I had mentioned a little bit earlier, we had started supporting banks on that journey through the SFI initiative. And so we have picked up the guidance from the central bank. And as we speak today, we have already organized a workshop to be attended by the banks and is being funded by the GIZ of Germany. And the essence is for us to bring the banks together and try to develop that capacity for them to be able to comply with the requirements of the guidance from the central bank. And part of it is the reporting. So on this journey, I think we are beginning to get somewhere in terms of an integrated reporting and a common framework for the banking sector. I hope that answers the question.
Yes, indeed. Thank you very much. And allow me to get back to Tracy now. Tracy, that's what the support KBA is doing. There is a view on what the regulators could do better to support banks and as well as the professional services firm. That is something that from KPMG would like to get a view. But as we conclude, Tracy, I'll come back to you shortly. But I want just Mary and Habil and perhaps Hamia, as you give your concluding remarks in about 1 minute each, what do you think the regulator should do and professional services firms to support banks implement ESG agenda in the organization?
Who goes first?
Let me, I was hoping that the flow would just be that, but let me go to Hamia first. Over to you, Hamia.
Okay, yeah, thank you very much on that issue. One thing that comes to mind.
Sorry, Abil, sorry to stop you, to interject. I want Hamia to go first. Thank you.
Okay, thank you. I think for me, of course, there are quite a number of regulations in the market. So one of the things that the regulators would do is help come up with the standardized regulations that the whole industry can adopt. So kind of create a uniformity across the market, and that again will help with the reporting and being able to do a comparative analysis amongst the different players in the market. In terms of the professional service firms, I think there's an opportunity for capacity building. I think it's a new agenda in the market. We're all learning. There are always new things to learn, and I think the likes of KPMG can come in to really educate us more about the different things that are happening, and also tools that the different players can use, in terms of assessment of some of these metrics. I think that would also be very useful if the likes of you can develop these tools that can easily be used and customized to suit the different environments of the banking sector.
Thank you.
Thank you.
Thank you very much. Mary, over to you.
Thank you. One of the things is we should talk more about it because, and of course, remove that perception that ESG sits on one side and business sits on the other side, just as I had commented earlier. We need to get everyone to understand that ESG is part of the business. That's the way to do business, so that all of us are focused towards doing business the right way. The regulators can also give incentives. And also, I think what we are also witnessing is, I know what is the requirement at the financial reporting. I know the IFRS standards, which I must follow for me to report effectively, and the auditors will come and check that. But there are no standards, common standards. So if we can create uniformity so that it is also possible for us to know this institution performs this way in ESG, because right now we all interpret it differently and we all assess ourselves differently. So that uniformity, I think, is very, very critical, so that we know where we stand, where are the benchmarks, are there any rooms for improvement, etc., etc. And I don't know whether the tax authorities would give some incentives for, for doing ESG well. And I think they are trying to do that now. I can see they have started doing incentives, like for if you give internships to the youth, you get some tax benefits. I think I saw something like that in the last announcement. So those are the kind of things that probably will trigger people thinking positively about it, instead of thinking that, oh, it's something so unpleasant, but we have to do it. No, but we need to do it willingly, so that, because we see the benefits of doing it. Thank you.
Indeed, thank you very, very much for that. We are coming to a close in the next 5 minutes. Overall, we was to close at 10:30. We thank you for your involvement, and I think it's only fair that Tracy gives her very closing remarks from a KPMG perspective, and I have views to the participants and yourselves. Tracy, over to you.
Thank you, Bernard. I think so much has been said today, both in terms of explaining what some of the key issues are. We know that the regulatory environment is changing rapidly, both at a global level, but also at a regional level. And I think we can expect that to continue to happen over the coming years. And the banking sector, the different institutions are at different points in their journey, I would say, but all of them need to be aware of the requirements, understand the issues at the top level of the organization, right on through to all of the core functions. That's going to require a lot of effort to really upskill your team members. As Stephen mentioned, getting new data and new tools, and there's just a lot to do. So I think because we're all at different points on our journey, it's important to start and to continue progressing. And I think taking a look internally at where you're at is a really critical early step. If you haven't gotten started, where are you at? What do you already know? What are you already doing? And then really understanding the full breadth of the issue. I think that's a really important first step. And I think for those that maybe are earlier on their journey, the clock is ticking, so to speak, on some of the requirements that are coming your way. So there's a lot to do, but there's, as I mentioned earlier, a lot of opportunity, and my colleagues on the panel have pointed out that as well. And it's really time to integrate that and move this agenda forward in the various ways that it needs to be looked at throughout the organization.
Great. And thank you very much, Tracy, for that. Habil, I know time is not there, but you have closing remarks to make, and I know you have key messages now to the participants in this sector. Over to you.
Yeah, thank you very much, Bernard. Mine will be more or less just a small comment in terms of the fact that we have talked so much about the ESG compliance and incorporating them into the governance structure of the institution. But one of the things is that banks are currently meeting some challenges. And I think from those challenges, maybe to your question about professionals and what can they do, maybe you might see some opportunities there. The one challenge that comes to mind is the fact that there is the institutional overlap between, for example, NEMA and the county government. As you know, under the Constitution, some functions were delegated to the county governments. And this includes, for example, air pollution, noise pollution, other public nuisances, outdoor advertising and all that, which are captured as delegated functions, and therefore under the jurisdiction of the county government. However, NEMA, which lost these functions, still insists on regulating them because of the fact that they have got some what they call enforcement powers. So there is that overlap between these institutions, and banks as players in that arena are finding themselves particularly inconvenienced, because you don't know whether something approved by NEMA is the responsibility of the county government, and going ahead to fund that in a very unclear scenario can be quite risky. Then the other one is some inconsistencies in the existing environmental regulations. And I'm talking about specifically riparian land zoning rules, where there is the physical planning laws and the environmental regulations, that there's quite a bit of lack of consistency on that. So they need to be defined. And possibly from this, you'll find that as banks are struggling, professionals may have some opportunities to help and block that challenge, and therefore support the industry in that endeavor. Thank you.
Thank you very much, Abel, and to our KPMG team. Thank you for responding to the questions from the participants. It has been very well recognized. We know we had a number of regulators from the region, and we appreciate your coming. And to my panelists, you've done justice to this topic, and I thank you on behalf of the team. So I would like to thank you, and now you might mute your videos, and we look forward to interacting with you again in other series. Thank you very much. Over to you, Edgar, to give us a closing remarks and wrap up the session.
Thank you, Bernard. I just confirm that you can hear me.
Yes, loud and clear. Thank you.
Very good, very good. I want to thank all the participants. I want to thank all our panelists, our presenters, Mary, Stephen Hamia, Dr. Habil, Christophe, our colleague, Tracy, and all others who have been able to come here today and be able to really participate in this session. Really, what is coming out from here is ESG must be embedded in the entire organization. And ESG is actually the business. And at KPMG, we say that ESG is everything we do, and everything we do is ESG. So ESG is a topic of the decade. ESG is just starting, but ESG is going to be around maybe for a century, because it impacts lives, it impacts livelihood, it impacts the planet, it impacts our people, it impacts our prosperity. So no ESG, you can see, you have heard from Mary, Equity Bank already getting the benefits of financing, which is being got at a reduced cost. Really, ESG is actually very, very important, and we must be able to align appropriately. At KPMG, we have got what we call the ESG Discovery Toolkit. And this is something we want to be able to allow you as banks, as organizations, to be able to administer to yourselves. It has 18 questions, and it looks at all of it holistically as purpose-led, and looking at it and saying, how do you create a sustainable ESG solution into your organization, integrating it as something which must be done. And it helps you to understand your business, to focus on your business journey, to be able to come up and develop something which actually works for your organization. We'll be able to share with you this toolkit with 18 questions so that you can be able to understand how you can be able to move ahead. But we also have a solution which we have talked about today. The solution starts with analytical phase. What is your status quo? You analyze the legal requirements. What are the ambition levels? What are the ESG reporting requirements? What is the strategy? Once you do that phase and you come up with the materiality analysis and the stakeholder analysis, you go to the concept phase. You come up with the rough concept and the detailed report in terms of creation of roadmap, designing management systems and processes that support. And then you go to implementation, rolling out management systems. How do you communicate the governance arrangements, the reporting, data entry, and all that? There are huge, huge benefits. Colleagues and fellow panelists, fellow people who have attended today's webinar, in terms of implementing the ESG agenda. We have responsibilities, most of all of us. Banks are at the center of all this as they influence the economy, as they influence the financing. But we also understand, and we also know that the employees have a role, government has a role, as Mary has said, by putting in place tax incentives. Her bill has said, by trying to align the different laws and regulations that are being implemented or impact on ESG. And even professional services firms as KPMG, that's why we are here, we have a role. We have a role to play. And we are saying the ESG agenda is central, is at the center of the business of sustainability and performance. Let us take it as a serious agenda. And as banks, it's not just looking internally, but in looking at the entire value chain of your business. And especially the people or the institutions you are financing, which have had a great impact on the ESG, on climate change, on carbon credit, on decarbonizing everything we do. I want to thank everybody who has come to participate today. And I know we are out of time by 8 minutes. Thank you very, very much for giving us this opportunity to be able to be with you. We'll send you the questionnaire, which we would like you to be able to fill out for ESG discovery, to know where you are, and let's be able to continue being in contact. I take the opportunity to close this webinar. Have a wonderful day ahead of you. Thank you.